I'm still bullish on gold. I think we're going to see potentially the equities market sell off. Money's going to come out of stocks and go into gold and silver and go higher. And we're very close to the switch being flipped where people move out of stocks and they pile into precious metals for one big last push higher. And I think there's a big move in gold. I think, $5,100 or $5,200 in gold, and silver could be up in the 80s an ounce. I think after that, I think that they're going to have very sharp corrections.
Market technician Chris Vermeulen outlines a rapidly approaching shift in capital flows that could redefine the precious metals landscape. He explains that equity markets appear vulnerable to a broad sell-off, with institutional money preparing to rotate out of risk assets and into hard stores of value. As that pressure builds, he believes gold is positioned for a decisive surge, potentially pushing toward the $5,100 to $5,200 range, while silver could accelerate into the $80s as the move intensifies. According to his read of momentum and sentiment, we are nearing the moment when investors finally abandon overstretched stocks and seek refuge in metals for one powerful upside run. However, Vermeulen also warns that once these upside targets are achieved, traders should expect sharp corrections, natural resets that follow every parabolic phase. For now, the setup remains constructive as precious metals prepare for their next major breakout. If you found this analysis helpful, make sure to hit that like button, share it with fellow investors who follow gold and silver, and subscribe so you don't miss the next big update.
Yeah, so gold is taking a breather. I mean, it's doing a beautiful stair-step price action where, it rallies up, it pauses, it has these huge, massive bull flags, and at this point, it really is just in another consolidation. We did a trade on gold that was just a quick 15%. Pretty much, we got in, it ripped straight up, hit our target, pulled back, and then we had this extreme FOMO wave in the market where whoever wasn't in precious metals or gold during this like 1.5 week window, they had to get in. And I mean, the sentiment was insane. I've never seen so many people panicking to get in and saying they bought in and all of this stuff. And then of course, usually when everybody's running the same direction, this is like our FOMO indicator. Usually it's going to have a quick pullback and try and shake everybody out and scare them. And it's done that. Now there's a lot of people out there saying, has silver put in a top? Has gold put in a top? Or miners topping? And it's funny because we ended up having a small gold trade to get in and people didn't want to get back into gold. It actually scared them that much. They go from needing it the previous week, they had to get in and they didn't care they're paying all-time highs to now I don't know if I want it anymore. And it's the same that we saw when you and I are looking at the NVIDIA chart. In the morning, they had to have it. By the end of the day, they didn't want anything to do with it. And so when we hit these levels, that means the market has to just consolidate, it has to trade sideways. It has to work out the bugs, work out the volatility. Anybody who's scared and is getting bored and giving up on gold is going to keep selling. And there's going to be new investors saying, no, I'll pick it up here. This is a correction. This is a pause. I want to buy it before the next leg higher. So I'm still bullish on gold. I think we're going to see potentially the equities market sell off. Money's going to come out of stocks and go into gold and silver and go higher. And I think you and I have shared this chart before in the past. So on the left-hand side here, we've got the S&P 500 that hit all-time highs. And then we had gold, the yellow line up here, starting to have a bit of a pause. And then we started to see the stock market sell off. Well, we've got very similar price action right now. Gold on the right-hand side is today. We've got gold having this pause on the weekly chart, and now we're starting to see the stock market sell off. And if we look at what happened before, the stock market eventually, it has a little bit of a bounce and struggles, but then it starts to break down and it starts to sell off, and it drops about 19%, while the price of gold shot up like 30. So I think we're very close to the switch being flipped where people move out of stocks and they pile into precious metals for one big last push higher. And I think there's a big move in gold. I think, $5,100 or $5,200 in gold, and silver could be up in the 80s an ounce. I think after that, I think that they're going to have very sharp corrections, but that's what the charts and the sentiment and the cycles, everything we're looking at are pointing to. So I like gold and silver here. They still might take another couple weeks to digest before maybe starting to move higher. I think a lot of it is going to come back down to what the stock market does. If we look back here, we had kind of 3-4 weeks that the stock market had to bounce up. These are the weekly chart. And so gold traded sideways during that phase. Everything was trying to figure out what it's going to do. And then once the stock market starts to sell off, that's when gold starts to shoot higher. So I think you got to be patient with gold and let it just mature a little bit more, let the stock market potentially stall out a little bit more. And then I think we're going to see some pretty big moves in the precious metal space.
Market analyst Chris Vermeulen explains how gold's recent pause is simply the latest step in a healthy bull market structure. After a sharp rally and a burst of extreme FOMO buying, the metal is now consolidating, shaking out late chasers and drawing in patient accumulators. Vermeulen notes that sentiment flipped quickly. Investors who desperately wanted gold at the highs suddenly backed away after a normal pullback. He compares the behavior to momentum stocks like Nvidia, where emotional reversals often mark temporary pauses rather than final tops. With equities showing signs of fatigue, he expects money to rotate out of stocks and into precious metals, setting the stage for a powerful upside surge. His models still point to gold targeting the $5,100 to $5,200 zone and silver moving toward the $80s before a larger correction emerges. Let's get into the interview.
Yeah, silver still has a really strong price chart. We could look at the most recent kind of pause and pullback, and it is pointing to a fairly significant move. The next kind of measured move is up to around $63 an ounce from where that is. It's consolidating like gold. It's just more volatile. It's smaller market, moves faster, but there's potential for a fairly explosive 27%. I do think it could go even higher than that, depending on how you want to draw some of these levels. Like, this is the most conservative approach. The most aggressive one based on the charts would be right around here, which is kind of around 71. And of course, if we do get into this feeding frenzy and it starts to get up there, this is where we go into these blow off top phases where it hits 71 and it can just spike and blow right on through it up into the 80s, because it'll be a big wave of FOMO of everyone piling in right near the peak, and it just, price goes straight up. So I like silver, I like gold. I'm not as big of a fan of miners. I'd rather just stick with the physical bullion, because a perfect example is we saw Thursday, we saw the stock market pull back like 1% and a third, 1.5%. But if you go and you look at like silver miners, for example, they pulled back like 5.5%. And so this is the problem. We saw this in 2007 as the stock market started to top and sell off, is when the stock market tide is going down, it pulls most stocks with it. Even if they're in a strong sector like precious metals, you'd make the same amount or more money in just trading gold than you are to try to take the leverage play in a stock. Because if the stock market falls 20%, it's naturally going to pull the gold miners down and keep kind of them muted. Whereas gold is a physical commodity, it's outside of the stock market. And we saw, huge turmoil on Thursday with Nvidia and the unemployment number. And pretty much all the commodities were like pretty still. Gold barely moved. It was slightly positive. Oil barely moved, because everybody's attention was on the stock market. They're licking their wounds. They're trying to figure out what to do. So it just goes to show that a commodity is outside of the stock market. And if the stock market is potentially putting in a top here, why not just trade gold or silver? Because it can keep going up if the stock market crashes. Whereas miners are going to have that real headwind and that struggle every now and then. It's going to get hit with a wave of selling. Pretty straightforward price action. You have a series of higher lows that eventually stall out, and then they start to make lower lows. And same with higher highs and higher lows. It's a rounding formation. You could say there was a head and shoulders style pattern that broke down. Well, now we're in this, rounding formation to the upside, and it's starting to clear some pretty significant bottoming resistance levels, and it's pointing to higher pricing. I mean, it's based on the charts, the long-term monthly charts, it's saying we could see the dollar index back up to like 110, 116, 121. I mean, it can go way, way, way up there, and no one's expecting it, it seems, because if I say anything bullish on the dollar, I kind of usually get my face ripped off. Everybody's bearish on it. And usually when everybody's bearish and they say it's worthless and don't touch it and there's no way it's coming back, there's too much debt, they get into the whole fundamental side. But price action generally doesn't move based on fundamentals. It moves on emotions and what's going on, and pointing to a way higher price. So a lot of people are going to be caught offside, and we could see the dollar and gold maybe move up a little bit together over the next little bit. But once the dollar does get traction and just starts to skyrocket, not only will the panic selling pull precious metals down because it creates margin calls, and when people are scared, they liquidate everything because they just don't know what they're doing. They don't know what to do. But the rising dollar is going to kill also the price of gold and silver. So I think our time is limited in the precious metals. I think we could see a big move up in metals over the next 1 to 3 months. After that, look out below, because the only thing going up is going to be like the dollar and probably inverse ETFs.
Analyst Chris Vermeulen outlines why silver's structure remains powerful despite the recent volatility. The metal continues to form tight consolidation projections that support a measured move toward the low $60s, with chart extensions projecting even higher into the $70s and, under a full FOMO surge, potentially the $80s. He contrasts this with the vulnerability in mining stocks, noting how broad market weakness pulls them down regardless of sector strength. Physical metals, he argues, hold up far better because they sit outside the equity market's emotional swings. Vermeulen also highlights the developing pattern in the US dollar, where long-term formations point to a significant upside breakout. If that move accelerates, it could trigger widespread liquidation across risk assets, including precious metals, after one more strong advance. The window for upside remains, but timing will be critical. If this gave you value, smash that like button, share it with those paying attention, and subscribe so you don't miss what's coming next. Stay alert, stay prepared, and keep stacking tangible assets.